Stocks see all-round gains with the Nifty index inching closer to the 25,000 milestone. Realty and capital goods lead the charge even as consumer goods and IT drag.
After buying 23% in India Cements, Ultratech now snaps up the shares of promoters and associates in India Cements to up its stake to 55% for nearly 4,000 crores. The move ups the ante in the India Cement sector.
Ola Electric Mobility looking to mop up about 5,500 crore rupees via a fresh issue of shares and an offer of 650 crore worth shares or offer of 646 crore shares in its IPO to be launched on August 2nd. The issue will test the market's appetite for the two-wheeler EV story.
Bandhan Bank climbs on a dip in slippages and a positive outlook, while PNB gains on maintaining its trend of improving credit quality, even as ICICI Bank manages to turn in a steady show despite the headwinds. Hello and welcome to a halftime report. I'm Ekta Batra. With me is Manglam Malu. Well, the big headline today is not earnings, but whether we're getting to 25,000 on the Nifty or not. Well, the low point of the day has been around 24,866. So even if we don't get to that 25,000 mark, just look at the kind of strength that we've seen for our markets today. Up around 0.6% at this point in time. We have the mid-cap index, which is up around 1% at this point. And the Bank Nifty is making a comeback as well with a gain of around 2% at this point. So all of the parameters are looking good, and let's see, it's set up for success as of now for the Nifty to probably hit that 25,000 mark. Very,
very close, Ekta. You know, it is just about 15 points away right now. Maybe a blink of an eye or maybe one big tick on, you know, a name like HDFC Bank or Reliance, for instance. Reliance actually is off the highs by about 40 basis points. So just pull up Reliance. The high on that stock has been close to around 3,055, and currently the stock is close to around 3,042. So 13-14 rupee on Reliance can easily take the Nifty to 25,000. The other one I'm looking at is HDFC Bank as well. Now that's been an underperformer of the Nifty Bank. The Nifty Bank is up around 2%, and HDFC Bank, its largest weight, is actually up just 0.2%. So to that extent, it will be a very important one to track. 17 points away from 25,000. Let's see whether we hit that today or not after a big 400-point move on Friday. We'll keep an eye out on all of this. So as we look at the Nifty, you get into this conversation that Shireen had with Sanjiv Goenka, Chairman, Sanjiv Goenka Group, telling telling Shireen Bhan that they intend to reach market cap of 2 lakh crore for the group in the next 30 months. He also discussed the overall group's growth outlook and how they plan to grow the PCBL and FirstSource businesses. Listen in.
For us, this is now a period where we're going to be investing significantly across our businesses in terms of research, in terms of capacities, in terms of growth. The last few years were a period of consolidation, of reinvention, of application development, but now all that is done, practically done. So it's now going to be very high on in terms of growth. So all our businesses will be expanding significantly. But the biggest expansion will be in the chemicals and the carbon black sector. But of course, every business is growing exponentially.
Before I get specifically to PCBL, because you said that that is going to be the growth engine in terms of expansion plans, but what would the group level capex be, for instance, over the next 12 to 18 months?
Over the next 12 to 18 months, we will be spending about 35,000 crores, and over the next 3 years, about 50,000 crores.
And what's the growth aspiration? You've now got a market cap of almost, what, $7 billion? What's the growth aspiration?
We touched 70,000 crores this morning, I'm told. And this is without taking our unlisted ventures. But over the next 30 months, 2 lakh crores.
2 lakh crores is the target that you're working with. Let's now talk about PCBL in specific. It is, of course, as you pointed out, the largest producer of carbon black in the country. I'm just taking a look at your financials. From 3,244 crores in FY20, you've gone up to 6,420 crores in FY24. There's been a margin expansion from 14% to about 16%. Your profit after tax has gone from 288 crores in FY20 to 491 crores. What's the ambition? What's the aspiration, both on growth as well as expansion for PCBL specifically?
So PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks, you make X%. In specialities, you make X plus so much. And that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries.
Okay.
We recently took over a company called Kinaltech in Australia, which has successfully tried this on a pilot scale. Now we will take them over and make it commercial. So it's a lot of things in chemicals and rubber blacks and specialty blacks. And from this level of profit, I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5
what
times
you...
growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
Let me now move from chemicals and move to talk about what's happening on the IT side with First Source. You've got a new CEO coming in September, Ritesh Idnani. You know, the guidance for FY25, a growth of between 10 to 13% and margin of 11 to 12%. How is this business shaping up for you? Again, what's the aspiration now as far as First Source is concerned? Since you are setting 5-year targets at this point in time, let me ask you what you hope to do with First Source.
I would actually expect profits, PAT, to grow about 2.5 times in the next 3 years. We've got our building blocks clear. We are expecting, what we've done is very simple Banya unlocks.
Cash flow and cash is king.
Cash flow and cash is king. So shift to high margin businesses, focus on costs, shift to expanding wallet share with existing customers, move to more and more higher margin businesses as opposed to lower margin businesses. We are acquiring as we go along. We've just in the process of completing an acquisition that we did in America recently, and the integration is just about happening. And that's a constant process. So to get into higher margin offerings, to become more and more relevant to our customers, to shift the onshore-offshore mix, to reduce attritions, to invest in people and quality of services, to invest in technology, to invest in analytics. So a lot is happening, and we are getting to growth rates which are not only aggressive but attractive. I can't speak much more about it, but at this point in time, we are very satisfied with what we have achieved. We have a new team, virtually a brand new team, and that team is beginning to deliver. And I see this delivery becoming stronger and stronger with each quarter. So where we were having, say, one major win in a year, we are now getting 2 wins a quarter.
Okay.
And these are major wins. And the target is to get to 3 wins a quarter.
Okay, that is Sanjiv Goenka laying out the plans. They are targeting a capex of around 50,000 odd crores over the next 3 years, and they've laid out a growth map for the company. Plan to spend around 35,000 crores in terms of capex just over the next 12 to 18 months. Talking about the various business plans there, we need to take a short break on that note, but we'll connect with Adish Patil, who's the CFO of Aarti Drugs, to discuss their Q1 performance. Stay tuned. Welcome back. Well, 24,891 is currently where the Nifty is at. So let's see whether we get back to those levels closer towards 25,000. But let's get talking to a couple of companies then. Aarti Drugs is in focus. That stock is down around 2 to 3 odd %. It reported what was a weak performance this time. The company's margins contracted while the API revenue fell as well. To discuss this and the outlook going forward, we have Adish Patel, who's the CFO of Aarti Drugs, joining in. Adish, welcome to the show. Well, let's start with the revenue decline this time round. It's been quite significant, and it's led by a decline in all of your segments: API, formulation, specialty, chemicals, intermediates. Tell us what took place, what resulted in the pressure.
Yeah, hi, good afternoon. So yes, this particular quarter, even the volumes were less. We were not expecting, actually we were rather expecting exports to pick up sooner, but it did not happen. I think the key reason remained the geopolitical tensions across the world. A lot of countries where we export to probably are still haven't got stabilized governments. A lot of elections are going on, because of which the government tenders are less, and in turn the API exports is little down. We saw, in fact, a lot of volume degrowth in exports this particular quarter, even though our gross contribution margins improved year on year as well as quarter on quarter on the standalone basis. That is a major segment which we have, API and Spec Chem segment. But because of the lower operations, means you can say operating leverage was quite low, because of which the EBITDA margins got impacted quite severely this particular quarter.
All right, as we're speaking about that, just hold on to those thoughts, Adish, because we have numbers at the bottom of your screen. One coming in from Adani Wilmar, where there's been a sharp expansion in operating profits and understandably on the bottom line as well. Remember, from the last same quarter last time to now, there has been a big drop in oil prices as well, edible oil prices that is, and as a result of which we've seen a turnaround in the edible oil businesses of all these industry leaders. Adani Wilmar, of course, sells edible oil under the Fortune brand. We had numbers from Patanjali Foods as well, which showed a marked improvement in the operational performance of their oil business, and the stock understandably up about 6%. Speaking about that itself, Tata Chem also, margins should be under pressure over the next couple of quarters, as there's been a sharp fall in soda ash prices, which necessarily is not particularly good, and which is why the stock has come off from the highs of trade as well. But let's get back to our conversation with Adish. Adish, when it comes to FY25, the street is expecting an improvement in revenues as well as margins. What is the kind of revenue target that you have for this year? Volume target, if you could give that as well, rate variance, etc. And what are the kind of margins that you're gunning for on a full year basis?
Okay. So earlier, before starting this quarter, we were gunning for around, 14 to 15% kind of a volume growth. Unfortunately, because of the decline in the first quarter, the second quarter will just go in making up those lost volumes. And the second half of the year, we still feel that we will be able to post that kind of a volume growth. So on a composite level, we believe some high single-digit volume growth should be there for the entire year. We are depending on the greenfield project, which will be coming online soon.
Okay, all right. So second quarter is probably going to be weak as well. Just hold that thought, because there's all of a sudden been a sharp reversal which has taken place in the markets with the Nifty. In fact, hitting the red line now. It's down around 34 odd points. Maybe an intraday chart will tell you more in terms of what's taking place. Maybe there's profit booking which is taking place at the higher levels. But Bank Nifty, surprisingly, there's a huge reversal which is taking place, because it was up around 2 odd %. And currently the Bank Nifty is just about flattened out at this point in time. We also have the mid-cap index, which is relatively better at this point. It's up around 0.6%, but curious case of a fall which has taken place for the Nifty as well as the Bank Nifty as we speak.
This reeks of, basket selling. That is what typically happens, because Nifty, the July series of, expiry took place last week. The Nifty Bank is, this Wednesday itself, 31st July, is the last trading day of this month. And the Nifty Bank has taken a 1,000-point downtake. You have HDFC Bank, ICICI Bank, Kotak Mahindra Bank, Axis Bank. So all of them falling in a similar manner. Typically, this happens when there is, one large sell order which has come in, and immediately after that selling is executed, we see a bit of a recovery as well. So, the market has seen some bit of recovery, of course, no way to the extent of the decline that we saw. But once that selling was executed, we've seen some recovery. The Nifty Bank is now about 100 points higher as against in the red just moments ago. So it's extremely volatile right now.
Yes, extremely volatile, but somebody taking profits off the table would not be completely unheard of in a market which has given such stupendous returns. So we need to put that into perspective as well. But nonetheless, the Bank Nifty is recovering now, so just about higher by around 126 odd points. We'll try to get to the bottom of what really took place just in the past couple of minutes and the sharp fall that we saw. But as you can see, even the mid-cap index is inching up. We have the Nifty, which is inching up a little bit as well from the low point. It's down only around 3.5. It's back in the green at this point. But remember, it's off the day's high, definitely. But Adesh, just to continue our conversation, so you're saying that the second quarter is going to go in making up a lot of the volumes that you've managed to miss in Q1. But where does that leave you in terms of the FY25 guidance? Because the last time we spoke to you, you said that there could be a 10% top-line growth despite a negative rate variance of 5 to 8%. And, you're also anticipating an improvement in margins. I'm assuming there could be a tweak to this?
Yes, definitely. So because we'll be not gaining that much volumes in the first half of the year. Though second half we'll be having 14-15, but on a composite level it will be around 7 to 9% volume growth. But at the same time, for the entire year, we also expect around 5 to 7% rate degrowth year on year. So probably that will leave us in the 4 to 6% range for growth in terms of value as far as top line is concerned.
Okay, so just about, can you repeat that? Total top line would be how much for the entire fiscal?
So on a value basis, we'll still target for around 5% in spite of the rate decline.
Okay, all right. And margins?
Margins on a yearly basis, probably about 13% EBITDA level. But as far as the last quarter is concerned, we would definitely like to go beyond 14% for at least the outgoing quarter.
Right. You have this 600 crore capex which has come on stream. So just wanted your thoughts on one, what more do you have in terms of capex plans for this year and the next? And what are typically the asset turns on capex in your industry? And because of this 600 crore coming in on stream, what's your aspirational revenue target, say, over the next couple of years?
Yeah, so at the full potential level, we should be going beyond 4,000 crores of turnover once we are able to achieve around 90% capacity utilization for the said projects. Having said that, current year we are also spending a lot on oncology product registrations, that is on the formulation side, which has a total peak potential of around 300 crores. For our formulation products as well. And apart from that, we are also looking at further derivatives of certain expansions what we have done recently. So that will further increase our revenue in spec chem and intermediate segment.
Okay.
And by when does it reach 90%?
So we will target around 3 years, 3 financial years, include so FY27 probably.
Okay. Your net debt was at around 564 crores at the end of FY24. What is your plan in terms of reduction? And do you probably have to take on a lot? Do you have to take on debt because of, say, working capital?
Yeah. So as far as the API industry is concerned, it is quite working capital intensive. Right now, we'll be sitting at around 575 CR of debt. The reason it has gone up a little bit is because of the term loans for the ongoing capex what we are doing, And also we have a little pile up in the raw material inventory, which we can bring down, and our working capital can come down a little bit from these levels.
Okay, so what is the plan on reduction and what is the target on the debt?
So our debt to equity as of now, means as of June end, it was around 0.44. Our plan is that whenever we are doing capex, there will be certain quarters or years when there will be peak debt to equity, and our peak debt to equity should not go beyond 0.7, 0.8. That is our plan. But at the same time, we are getting our cost of debt is quite low. Even our working capital is around 7.5% or so. So that definitely improves the ROE. So we don't want to remove debt completely off the books, but we'll maintain it around 0.5, 0.6 debt to equity.
All right, just one word before we let you go. You said that you're looking to improve your working capital days by reducing inventory. What are they at right now, and what is your aspiration here?
Yeah, so we feel that around 30-40 CR can be easily reduced, and that is purely on the side of raw materials. Our raw material days have gone up slightly higher, and we can easily reduce that by around 10-15 days.
All right, Adish.
Okay, all right, Adish. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is the management of Aarti Drugs. They've reduced their FY25 guidance. Earlier, they were guiding for around 10% growth to around 5% growth. The negative variance would be around 5 to 7 odd percent. And they are targeting volumes of around 5 to 7 odd percent. So they're hoping for a recovery in terms of volumes going forward. Currently, the stock is under pressure. It's down around 3.5 odd percent. Not done much this year either. We'll take a short break, but Rachna Vaidya will join in with some trading calls on the other side. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We're tracking the volatility of the market as we were, moving towards the 25,000 mark on the Nifty, led by the Nifty Bank. There was one fall, sharp swoop down of about 1,000 points on the Nifty Bank. Seemed like a case of basket selling, and from there on, it's made a bit of recovery. The Nifty Bank is now up around 300 points, but there was that bit of intraday basket that was sold. So we'll keep an eye out on how this pans out, because we are tracking the Nifty's journey to 25,000. What's interesting is it started on Friday itself. In July series, the Nifty was up 362 points. 2 days of the August series so far, the Nifty is up already close to around 450 points, and as we speak can go higher as well. For the Nifty Bank, this volatility can also be explained by the fact that the Nifty Bank July series expiry is actually day after tomorrow and not on Thursday as it happened with all the other frontline indices. That's because it happens on a Wednesday, and 31st July is still a working day. On the Nifty, 25,000 call writers are still very active, close to around 1 crore shares written on that, telling you that levels upwards of 25,000, 2550 could see some bit of profit taking. But at the lower level, 24,750 thereabouts is an extremely strong support, which is why we saw the market bounce back immediately from lower levels as well. 150 rupees in options for the 24,900 put. The one stock that I'm watching out for today is India Cements. After the huge open interest build up post the deal announcement that came by over the weekend, the stock may enter F&O ban. And remember, this is actually the last series for India Cements to be in F&O itself.
Okay, all right, Mangalam. Thanks very much for that. So that's the F&O update there. We have Rachna Vaidya who joins in to talk about the technicals of the market. Rachna, hi, welcome to the show. Well, what did you think of that sudden dip that we saw, which is now seems to be largely bought into? We have the Nifty, which is up around 28 odd points. It's still off the day's high, but nonetheless.
Yeah, good afternoon, and thanks for having me here. And as far as the recent dip is concerned, the sudden dip is concerned in Bank Nifty and Nifty, well, I believe it is playing exactly as per the charts. And if you see on the charts on the Bank Nifty, on the futures level, the level that it had just hit before a few minutes was exactly a resistance that had played out on the daily charts, which was 20 period average. And there was also a weekly resistance over there. So rightly so, that the prices have retraced from therein and are now moving towards the support. So just like every good thing that begins has to come to an end. So this was a kind of 2-day move that we saw, and which has played out very well as per the charts, but now it has come to a halt because of the resistances in the path. All
right, take that point, Rachna. Thank you so much for joining in. Good to see you in. Rachna, of course, has co-written a couple of books with the late Ashwini Gujral as well. So, comes in with some technical, expertise of the technical side of the market. Individual stocks, give us some stock picks.
Yeah. As far as the individual names are concerned, especially at this point in time after the sharp fall, I would say the stock that we'll look at will be from delivery perspective and not from the intraday perspective, because we had a very nice move in the most of the names in the intraday raises, which has already played out. So whatever we see now will be from delivery point of view, and one of them is PNB and the other is DLF, and we'll be talking about the futures of both of them. So as far as PNB is concerned, today it also has a tailwind of the news behind it, which was a very good result that it came out with. And the price action that we are seeing today is the first day of the move, and it has broken out of a downfalling trend line, and a reversal is just begun today. So I believe there is a lot of space on the upside which is yet to be covered. And as far as the futures of PNB hold the level of 123 on a closing basis, we could be very soon seeing this chart, or the price is going towards 140. So that would take a few days of time, but 140 is the level that we keep as a target. And as far as DLF is concerned, again, this is a sector also which is showing strength at this point in time. And as far as the price action of DLF is concerned, again, the same thing. It has come out of a downfalling trend line, and today is the first day of the move. So definitely we can see some follow through over here in the upcoming days. And as far as this counter holds on the level of 850 on the futures on closing basis, we could be seeing the charts moving towards 900. And once 900 is also taken out, then we could be seeing the chart move towards 940 as well. That will take a few days of time.
Okay, all right, Rachna. Thanks very much for joining in and taking us through all of those calls that you have. Well, for the mid-cap index, it's recovered to a gain of around almost 490 odd points. We have the Bank Nifty, which still has some way to go, so it's up around 0.5%, but there is buying coming into a couple of the heavyweights. So a couple of stocks which stand out are UPL, which is up 2.5 odd%, L&T, Divi's Labs, which has had a great month, in fact, and the others including BPCL and State Bank of India. We'll take a short break, but up next, we'll be talking to the management of TTK Prestige to discuss their Q1 performance. Stay tuned.
Of TTK Prestige with us. The company reported a rather subdued set of numbers in the first quarter, led by weakness in the consumer sentiment, though we did see some traction in the cookware segment where the growth was about close to double digits itself. The stock lower by about 2%. The important part is what the recovery has been like in the second quarter and what the company aspires for this year. Venkatesh Vijayaraghavan, who is the MD designate and CEO of the company, joins us on the show. Thanks a lot, Venkatesh. Always a pleasure speaking with you. The last time we spoke was at your stint at CK. But, let's talk about TTK here. What have you seen in terms of recovery, consumer sentiment recovery in the second quarter so far? And in light of that, what is it that you can guide for this year on the top line?
So as you could see, I think from a demand side, we see two contrasting perspectives today. We are very clearly seeing some part of the channel which are growing very fast. For example, our own exclusive stores, large format stores and e-commerce as a channel is growing significantly faster. We do see a signaling of demand generation and demand return back that's happening in the categories as you would see. However, the general trade, which is a large part of the industry today, is still to see a demand recovery, and that's one of the pressure points that we are seeing as we move forward. While we do believe that the industry is sort of bottomed out and it should go up from here, critical to this growth would be the demand generation that happens from rural and from the modern and from the general trade channels, which we are seeing a stress at this point of time. The good point, the silver lining, is that the alternate channels in terms of large format stores, exclusive stores, e-com as a channel, these have started growing very aggressively. And we do believe that as we move forward, this would probably help the industry at large and Prestige at large to grow faster.
Okay. All right. Mr. Venkatesh, your cookware segment did well. It was up around 10% this quarter. what was demand like within that particular category? And are you anticipating an increase in commodity prices to probably have an impact on the performance in Q2?
So commodity prices have been a little transient. There's been an increase in commodity prices and a softening as we move forward. We do see pressures of the commodity pricing in the short term. But however, in the long term, I think it would stabilize, and that should not be of concern as we move forward. In the short term, yes, there's been a stress on the pricing. The material pricing has been a concern, and we are addressing that through internal corrections as well as in terms of some of the actions that probably the industry would take as well. As far as the cookware industry is concerned, the cookware category is one of the categories which has a significant potential in terms of both penetration as well as in terms of premiumization. So amongst the categories we play, cookware is a category that we see very clearly an opportunity to premiumize, and that's playing out in the market as we see, and an opportunity to continuously keep increasing the penetration. So it's a game that probably would be played more aggressively as we move forward. Of course, it is seeing competitive intensity as well. While we've been present in all categories, a lot of peers have got into these new categories, and that's something that probably would be something to watch out for. But we do believe that cookware is a segment that would be driven by both penetration and premiumization as well.
All right. So could you give us a sense then, what is the kind of delta that we're looking at here for the entire year? What is the revenue growth that you're targeting? How much faster would the cookware segment grow? And in that itself, what will your portfolio mix be like? Because, at the premium end, you have competitors coming in, but you've also looked at introducing your mass brand as well, Judge, which will help you gain market share. So if you could give us some outlook on these metrics going forward.
So while I won't be able to look at specifics right now, but I think directionally what we do believe is that one, the industry starts bouncing back. Two, it is being led largely by the large format stores and e-commerce chains, as I told you. Therefore, we expect or we're dependent on rural and general trade to sort of bounce back. The signs of them are yet to mature, and we do believe that over a period of time, probably it should start kicking in as well. As far as the categories are concerned, we are very strong in cookers and cookware, and we continue to remain market leaders, and we are accelerating growth in these categories. Appliance is one category where there's been huge competitive intensity, and we are not market leaders as yet, but with reasonable market shares. And we do believe that's an opportunity that we would accelerate with a combination of new products introduction and also scaling up our presence in some of the categories. So as a combination, you would see growth being driven by accelerated channel growth from specific channels. As the traditional channels start moderating, we should see the base effect coming for us better as a market leader, and an increased emphasis on premiumization in cookware and an accelerated growth from the appliances. That's the way I would see it happening. While I won't be very specific in terms of direction, I would positively look at growth as we move forward into the year.
Okay, all right, Mr. Venkatesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from TTK Prestige. That stock a bit subdued today, down around 2% odd. For the markets, well, there is a further recovery which is taking place. So we have the Nifty at around 24,876, Bank Nifty, which is up around 0.7%. We'll take a short break, but more stocks on the other side. Stay tuned. Welcome back. Well, let's just talk about specific stocks now. We have Cipla, which is in focus. Remember that it reacted very well to its numbers on Friday, but today it's seeing some amount of profit taking. The management has indicated, very importantly, that $235 to $240 million would be a sustainable run rate for the US. Remember, this quarter it came in at $250 million, so they're expecting maybe some amount of come off, but it would still be a good amount of business that they would be generating from the US. Separately, the management has maintained its guidance for an FY25 EBITDA margin of 24.5% to 25.5%. So no real big surprises on the negative side, which have come in for Cipla, probably routine profit taking. Some brokerages such as Goldman have a sell with a target price of 1,400 rupees. Nomura is neutral. Antique also has a sell. So maybe there's some amount of, pressure on account of that. We do one thing, we'll take a break, but on the other side, Manisha Gupta will join in. She has the Union Food Secretary Sanjiv Chopra with her. Stay tuned.
stellar recovery for the market. The Nifty Bank is now up 420 points. Remember, at one point it had gone into the red from a 1,000-point gain. So nearly 40% of those declines have been recovered. Let's see where we go from here. The Nifty once again inching closer towards that 24,900 mark itself. The mid-caps continuing to do well. Ultratech has moved to the high point of trade. Let's get you excerpts from our exclusive conversation with the Union Food Secretary. Manisha Gupta caught up with Sanjiv Chopra, who's the Secretary, Department of Food and Public Distribution, quizzed him on the food industry concerns around fund allocation and policy implementations on the union budget. Hear that conversation.
I don't think that kind of an impression is really correct, because from the times, let's say, of 2013-14, when the allocation for agriculture was about 15,000 crores, to the present position when we have agriculture and light sectors with a total allocation about 1.5 lakh crores, I think we've come a long way in the past 10 years in case allocation has risen so steeply. That just reflects the commitment of the government for the farm sector and for the farmers.
There have been concerns, of course, when you look at pulses and edible oil, the kind of import that we do, and inflation concerns have led to a lot of measures that the government took in last 6 or 18 months as well. Are we looking at now easing off from that? Do you see a situation where you think that the things are getting comfortable?
So we have a very institutionalized mechanism of monitoring the prices in the government, and every week these prices are reviewed by a committee of secretaries. And then later on, we also apprise the committee of ministers. So we are maintaining a close watch. As of now, the prices of the pulses, particularly tur and urad, so they are still in the red zone, and quite appreciably so. So we are watching the situation, and any easing of the restriction that have been imposed, or whether it is the pulses or whether it is wheat and rice or sugar, so they would be taken at an opportune time when the government feels that the position or the stability in the sector warrants a kind of restriction to be done away with.
How difficult is it balancing the farmers where you have promised double income? And we have seen a lot of work being done there because of the kind of increase we've seen in MSP. The other is the stakeholders, which includes of industry, exporters, importers, and then the consumers.
Oh, it's definitely very tough. It's not easy at all. It's a tightrope walk. We need to keep the interests of all the stakeholders, taking the sugar sector in particular, in case, let's say, we have the sugar mills who have their own interests. The consumers also want stable prices. The producers, the sugar farmers, sugarcane farmers also would like increased FRP. So maintaining a balance between these interests, which are at times a little conflicting, is certainly requires some bit of tightrope walking.
I'm assuming you meet a lot of industry guys, and one thing that resonates from everywhere is a long-term, predictable, sustainable policy.
True. The policy, of course, has to be something that can be relied upon for the short to medium term. And the government has ensured, to the extent possible, that the policies that are brought about in terms of the various crops that the ministry deals with are kept at a level where there are no surprises which are just sprung on the industry. But having said that, let me also say that the government is also conscious that these surprises sometimes become inevitable, keeping in view the interests of the economy and keeping in view the interests of the 140 billion consumers of the country. 140 crore consumers of the country. I'm sorry.
So when we are looking at sugar now, and this is an area, as we were all talking, I mean, we were one of the leaders when it comes to Bio Alliance there, Ethanol Alliance. How are you looking at the push here? Because as you've been saying, I was hearing your speech, and water concerns and, of course, the price concerns, and the other grains are being part of this as well. Are we looking now to a roadmap which tells us on what can we expect in sense of ethanol blending? People have talked about flexi fuels, etc. So there's a lot on your plate right now, even just with this one sector.
True. So broadly, the picture is that in case we are now aspiring to have a 15% ethanol blending this year, and that is up from about 1.5% blending, which was there in 2013-14. So we really have come a long way, and I think globally it's accepted that India has done wonders in the ethanol blending program. And going forward, while the reliance was majorly on molasses-based feedstock, going forward, that kind of reliance would be there, but it will be tempered by an equal reliance on the grains, particularly maize. So we've seen this year, we've had a sharp jump in the ethanol that we got from maize. And going forward also, we expect that in the next 2 years or so, when we are looking at 20% blending, maybe half the ethanol would be coming from sugar and roughly half would be coming from grain.
Mr. Chopra, this is my final question. And if there are two things that are top of your mind right now when it comes to agriculture and food, what are they?
So agriculture, of course, the first major thing that we need to look at is the crop diversification because of the ecological damages which are being caused by the selection of a particular monocropping, if I can call it that, particularly in the northern part of the country. So that is one thing that really is of concern to us. How do we change the cropping pattern in the country? And the second one, of course, is to how we can have more reliance, self-reliance in pulses and oilseeds.